Hey everybody, it's your boy Chicago Sean McLaughlin. Welcome back. This is the first video I've recorded in a while. Got a bunch of new people that came into Honey Stocks options, so doing a little Q&A session for them, or really just kind of a lesson session today. I didn't get any questions this week that needed to do a video about, but certainly have a couple things I want to talk about. One question that I did receive in email from someone else I thought would be instructional for everybody. But before we do that, the market just closed on Monday, February 8th, and the S&P had quite a rally into the close. Looking at the daily chart here, hey, it's a bull market, you know. Anyone who follows me on Twitter knows that. Quite a little finish, and that chart looks great. It seems like there are blue skies ahead in the market. Anyway, for those of you who are first timers here, for charting and for options analysis, I like to use my Thinkorswim platform. This is what you're looking at right here. This is a simulated account because I just use it for that. I do all of my trading on Tastyworks, which I'll show you that platform in just a second. But before we get there, I wanted to talk about a question that I had that came in this week. Somebody asking me, how do you trade illiquid options? So let's pull up an example here. Let's go to a trade tab and let's pull up a stock that I've been thinking about getting a position in. I don't have one in yet. But this TPB, Turning Point Brands, if I bring up the chart, you see I'm watching this 57 level. If it breaks above 57, I may get into it. But right now it's kind of hanging below. That looks like I'm buying the top on this kind of chart. But if you zoom out on a weekly chart, you'll start to see what I'm seeing here. We're talking some major all-time highs. If we get above the 57 level. Let's go back to the daily chart. But really want to talk about the options. So digging into the options chains here, I got February options, March, April, July. Notice in the open interest column, which is right here, with the exception of April, we don't have a whole lot of open interest. And if you look at the volumes, see a lot of zeros across the board, right? And to make matters worse, if you look at the bid-ask spreads of the slightly out-of-the-money options, they are incredibly wide. We got a 95 cents by 230. We got 40 cents by 450, 145 by 520. So clearly, there's not a lot of options activity going on here. So the question was, if I absolutely had to, wanted to, whatever, if I wanted to get into an options position in a stock like this, what would I do? Well, my knee-jerk answer to that is I wouldn't trade it, at least not with options, right? I don't like being in options that don't have much volume and have very wide bid-ask spreads because your options are limited, quote unquote. But if I had to get into an options trade here, let's say I wanted to buy the July 60 calls. They're bid 460, offered 640. Wide, that's a wide bid-ask spread. And if that's the strike I wanted and I wanted to get into it, here is what I would do. I would put a bid in above the best bid. So if the best bid is 460, I'd put a bid in for contracts at say 470 or maybe 475. I'd increase the bid, improve the bid a little bit. And then what do? I wait. I'd be incredibly patient. There's a bit of a Zen acceptance that has to happen here. As you wait for a fill that may or may not come. It might take all day. You might have to keep coming back for a couple days, and stocks are really illiquid. But by putting in a limit order at a price that you're willing to pay, you're doing two things. Number one, you're defining your risk. If this stock goes to hell, I know that the most I could lose is the debit I paid to enter this trade. In this case, if I had a bid out at 475, that's the most I can lose. Okay? You have to size that position in such a way that you are comfortable taking a 100% loss. All right? I mean, that's it. You have to know, you have to be willing to accept that loss. That's number one. Number two, by making the market come to you at your price, you're getting the price you want. The last thing you want to do is send a market order here to buy. If you put a market order in to buy an option, you're going to get filled at 640. It's a terrible price. You're going to buy at 640. You do not want that. Okay? Please don't ever put market orders, even in very liquid options where the bid-ask spread is measured in 5 cents or less. Do not do a market order. You will get a bad fill, and market makers are very skilled and know how to move their bid asks to take advantage of market orders. Do not use a market order ever trading options. Always try to be the best bid in an illiquid situation. Maybe you can go halfway. Maybe you can put a bid in at, say, 525. But I wouldn't even go that far. I would try to stick close to the bid, be the best bid. And if somebody jumps up above you, somebody improves upon your bid, let's say I had a bid at 475 and then somebody comes in and bids $5, well, then I'll go in and put a bid at 510. As long as I still want it and as long as I still accept that price, that's what I would do. It's a patience game. It's a waiting game. There's an art to it. Rule of thumb, don't even trade these options. But if you must, if you have to, if you feel like you got some kind of special insight that you are seeing that nobody else is seeing and you want to get into these options, use limit orders, get in as close to the bid as you can, but certainly no more than halfway between the bid and ask. Okay, the next thing I want to talk about, I'm going to flip screens here over to my Tastyworks platform. This is where I actually do my trading. And these are open positions that I currently have on. I started February with a clean slate. So all these trades here that you see were all entered beginning last week, early last week. And these are the positions that I'm currently holding. They're sorted by my open PnL in each position. So my biggest winning positions are up here at the top. My biggest losing positions are down here at the bottom. Now, one thing I should point out that every one of these trades, more or less, it's not exact, but every one of these trades, the most I'm willing to risk is around $600. That's my comfort level in trades that I put on with my account. I don't want to risk more than $600. Your number could be different, could be higher, could be lower, doesn't matter. But for me, 600 is the max I'm willing to accept as a loss in any one of my trades. So with that parameter in mind, even this biggest loss here, down 168. I don't like being down 168 in that trade, but it's not, it's certainly within the realm of possibility of the trade that I put on. Now, I just want to throw a concept out to you guys, something I've been kicking around, something that I use and I plan to use going forward with my positions is every trade that I put on individually, when I put this RXT trade on, or when I put on this SPY trade, or when I put on this Piton or Apple trades, every one of those trades, I have an individual trade plan. So I know where I'm going to stop out of the position. Like I know where on the chart I don't like the stock anymore. So let's pull up Apple, for example. Actually, I have to go back to my Thinkorswim platform because I prefer those charts. And this is where I keep my stop loss orders. So you'll see on my Apple chart, when I pull it up, I've got my stop loss level right there. It's right around 132. I've just kind of approximated, but I've got an alert so that if Apple trades down below 132, that's my signal to get out of the trade, at which point I will exit my trade. Let's go back to my Tastyworks platform here. So every one of these trades, I have a plan going in on an individual level. Each one of these trades that I'm in, I know where I'm getting out. I know where I'm taking profits, and that's the plan, right? Now, that's all well and good. And when in doubt, always defer back to your original plan getting into the trade. Always defer to that. But if you're like me and you start accumulating a lot of positions, and I'm just getting started here, I plan on adding a bunch more this week. I'll probably have 25 positions at some point. If I'm lucky. It means they're all working. Because what I end up doing on a portfolio level is I am really aggressive managing my losers, okay? Again, on an individual level, each one of these trades that I'm in right here, each one of these I've got a plan to get out if I don't want to. But even before that happens, I'm looking at my open PnL in these trades. And every day, I'm going to look through all my losing trades. So these, 6 or 7 trades right here that are red open, I'm going to look through every one of these trades. And if any one of these trades are a trade that I've been holding for a week or longer, I'm getting rid of it. I'm getting out of it. I don't care. I don't care what the stock is doing. I don't care what I feel about it. The bottom line is I'm losing money, and that's the only truth that matters, right? If the trade is losing money, I'll give it a week, right? So like this RXT trade that I'm in right here, you can see my trades. I got in, here's the date. I got in on the 5th. So what was that? Friday? Thursday? So I'll give this until the 12th, which is a week from the 5th, right? I'll give this until, I guess that's Thursday, Friday. I'll give it until Friday. If I'm still in the red when Friday comes around, then this trade's gone. I'm out of it, okay? So when I put a trade on The first week, I'm very lenient with it. I'll still honor the stop if it hits my stop loss, but I'll give it some room. I'll give it a week to shake out. I'll give it a week for my thesis to start moving. But guys, I have no patience for positions that aren't winning when I'm holding a lot of positions. So I've got, what is this, about 17 positions on right now? When I've got a portfolio like this, I'm very aggressive managing my losers. I'll give my winners all the room they need. I won't even pay attention to these stocks up here at the top of the list. I'll just let them do their thing, right? Let them do their thing. All I care about is these trades down here at the bottom. If these trades are over a week old and they're losing, they're gone. No questions asked, no second chances, no ifs, ands, or buts. I'm getting out. Now, that said, if I get out of one of these trades, I'll still keep an eye on it. I'll still set an alert on a chart that if the stock goes back to my original entry or above a key level that tells me that the trend is back on, I might consider getting back into the trade. In fact, I probably will. Not every case. I'm not going to promise that I'll do that, but I probably will get back into the trade and treat it as a brand new trade, write out a brand new trade plan. So that's a little insight into what I do, guys, on a day-to-day basis. I hope this was instructional to you. If you have any questions, hit me up in the Honey Stocks online or hit me up in the YouTube comments. Happy to answer that there as well. Thanks again, everybody. I'm Chicago Sean McLaughlin. Trade 'em well. I'll talk to you soon. Bye-bye.